Kim Anderson, our grain marketing specialist, joins us now. And Kim, we're out of this sideways pattern. We've spent so much time talking about wheat prices have dropped a little bit. Get us all up to speed.
Well, since December the 11th, when the pattern broke out of that $8.80 bottom side, they've fallen about 80 cents on the March contract, but cash prices are only down 60 to 65 cents, and that's because we've had a 15 to 20 cent increase in the basis depending on location. And I think that higher basis is a positive point in this 60 to 65 cent price decline.
Now, market chatter right now is that these changes that you mentioned are because of changes in the fund market.
Yeah, the funds have been liquidating long positions in nearly all the commodities. It's a year-end thing, I think, a rebalancing of their positions. Now, analysts are talking about the funds reducing their long positions, their bought positions, with no change in the supply and demand situation. I think what's went on here is that the market recognized that we had adequate supplies, which we've talked about the last couple of months in both the United States and the world, that we don't have a shortage of wheat, that we've got the wheat supply is well relative to demand, and prices were, quote, too high, and therefore they broke out the bottom side of that market, and they've fallen about to 60 cents.
Okay, now that all this has gone on, what are you watching now?
Well, I'm watching the March contract. It's got support at about $8. It's right in that area now. The July contract on Kansas City has support at $8.24. It's right at that level. If we break those points, and we're possibly another 50 to 60 cents down, or if we hold that, then we may go 40 to 50 up. But I'm watching the March and the July contracts.
Okay, it's the new year, obviously a lot to think about. What are you going to be watching in the next week or two?
Well, the last couple of weeks we've been in the holiday market. The volume's been relatively light. It's going to take us a week for the analysts to figure out what's going on. We've got a USDA report coming out in early January that they're going to be watching. Next week, if we're below on that March contract, below $8, then we're going to go down. So I'm watching that real close, watching what the funds do as they rebalance over the next week to see what happens there.
Okay, Kim Anderson, we'll see you next time. Thanks a lot.